Hi again, this is Rick with AmazingAccuracy.com, and today is February 1st, 2014. It's currently 4:11 p.m. Chicago time. It's a Saturday, no trading going on right now. I'm currently working on my FDates report for my clients this week. And I was looking at this daily chart of the Canadian dollar, which is before you now. And I just wanted to make this video because there's an interesting indication here that I thought I'd go ahead and share with you. Now, what I have here on this daily chart of the Canadian dollar is I have two oscillator indicators plotted. Here we have the MACD, and below that I have the directional movement system, or otherwise known as the ADX or ADXR. In this case, this is an ADXR indicator. Not really much difference. But anyway, what I want to show you here real quick, I don't know, I'm assuming that most of you watching this may be familiar with these indicators, but let me just go over it real quick, okay? And we'll just call this either DMS, or I'll just call it ADX because it's a familiar term. The ADX down here where you see my cursor, you're going to see we have this blue line, that's your plus DI line, and this red one is your minus directional index DI line. And then this is your ADXR line right here. And when it's going up, and especially when it crosses above the value of 30, this is an indication of a strong trend. It's not directional. In other words, if it's a strong bear trend, it will still go up. If it's a strong bull trend, it'll still go up. Just the fact that it's going up is an indication of a strong trend. You can see that it was strong from this period here on up, and we can see on the chart that it was indeed very bearish in this trend here. Then you see kind of flattened out here, and then up here you can see that the trend flattened out, so it really was going sideways for a period of time here. And then it resumed its strength around this period here as it started to go back up again, and you can see that that was right here, and it has been again a very strong bearish trend. Usually when someone says a strong trend, they think bullish only, because strong being bullish and weak being bearish. But in reality, a trend is strong in either direction. It's just that it's really going in that direction, and so it's strong. There's a lot of momentum there. Another thing too is while the ADX line here, the ADXR line, is moving up, as you can see, and it's going past 30. 30 is right at this level right here. You just happen to look at the minus DI plus DI lines, and here the minus is above the plus. That tells you it's in a bearish mode. So going from where it crossed over here, okay, you can see that the red moved above the blue. That's the negative moved above the positive. From here on, it has been above the positive, so it has been bearish clearly from here all the way down to here. And for brief moments, you can see it was bullish from here to here, and that was this part right here, and it was bullish. I'm off the camera screen already, so I won't go back over there. So it's very easy to read when after you've just played with it for a little bit. Now, every time you see these two lines come close together, there's always the potential that one will cross above the other, and such as like it did back here. So you want to kind of watch that in conjunction with what's going on with your MACD, for instance. So here we can see that when the negative moved above the positive, and they're both above the ADXR line here in this case, there was also this crossing down of the MACD into this bearish red zone here, and that coincided, of course, with the beginning of this nice bear movement here. So I want to draw your attention here, because notice that the ADXR line is at an extreme. It doesn't stay at an extreme very long. Okay, once it reaches this extreme, it often starts to tailor off, and when that tailors off, the market will either go sideways or turn in the opposite trend direction. In this case would be bullish. But we also want to note that the MACD is also extremely oversold, and the two lines here, the oscillator and signal line, have been moving closer and closer together, thus causing the histogram to move closer and closer to this zero line. We can speculate that within the next couple of days this blue line is going to likely cross above the red line here, and that's going to be where the histogram will start moving into the green territory, and that is of course back where it's a little more bullish, as you can see, like right here. But at the same token, again, notice how we're at extremes on both these indicators. So if you plot one above the other, you can see how they start to, squeeze next to each other here. If you look down here, you'll see that the negative line is starting to taper off down and the positive line is tapering up. We could speculate that not only will we get this cross up here on the MACD, but that we have good potential for these two lines to cross over one another, and that the blue then thus would be above the red, and of course this line here for the trend would start tapering back down again. So this tells me, for one, that we have very strong reason to believe that we could be looking at a rally here in the Canadian dollar for the next few days. Now, utilizing these indicators along with my FDates, the FDates are turn dates. They're calculated with a proprietary application that we've used now for over 16, 17 years. And here you can see where it forecasts this bottom here. Then the next one forecasted the previous top. And now we are speculating that we're going to have a bottom here on this FDate here. It's already an outside bar, so we know we're going to get a bottom or a top either way. So we know we're going to get our turn, but we're going to speculate that this is going to be a bottom because we have other supporting evidence that that is likely to occur. Okay, so I just wanted to share that in a video so that you can see how I apply some indicators along with the turn dates. The turn dates are what I use for the actual timing of entry. In this case here, this is the very bottom right now. I'm not saying that this is the end of a downtrend. I'm saying this is the very bottom of this chart right now. I don't make a habit of buying the very bottom, though you could if you want, if you have such evidence as this to support it. I'm more of a conservative trader, so if I was to be a buyer, I would prefer that first price rose a little and then just pulled back, and then we had another one of our turn dates at that time, and then I would buy off of that higher swing bottom price bar rather than the very bottom. In other words, if I was to draw this, it would look something like this. Prices, let's say, would rise for 2, 3, 4 days, whatever. Okay, and there's our indication of prices have moved up. Then prices pull back again, but it doesn't pull back below this low here when another turn is expected. I'll have another diamond over here somewhere based on our calculations, and then I would buy off of that because it is higher than the previous bottom, and that's what I want to see when I'm expecting a bullish trend, is higher swing bottoms and higher swing tops. Well, thanks again for watching my video. If you haven't done so already, please subscribe, and also don't forget I have a free newsletter. If you come to AmazingAccuracy.com or the FDatesForum.com, and you can just sign up, and from time to time I send out a newsletter with forecasts and other good pieces of information. Thanks again for watching.